For Dele Oye, an investment advisor, the announcement signals a rare opening in Africa's largest economy. He believes the planned sales could allow private capital, both domestic and foreign, to enter sectors that have long been dominated by the state, such as energy and infrastructure, as well as education.
The asset sale is not just a mere fiscal exercise. It's a huge opportunity for both local and foreign investors to buy into infrastructure assets and energy assets in Nigeria. So it's a major source of interest because it will naturally.
The plan builds on sweeping economic reforms launched in 2023. Nigeria unified its foreign exchange windows and removed fuel subsidies, policies designed to stabilize public finances and attract investment. But the immediate impact was tough. Inflation surged and the currency weakened sharply. Economists say divesting underperforming public assets could now help boost revenue, create jobs, and support growth.
Nigeria's decision to sell state-owned assets is actually, will I say, long overdue now, because there are some assets that government is not using them in a viable way to generate, revenue for the government. Selling them means that they want to make that asset viable, so that it can generate more revenue and it can create jobs for the Nigerian and also expand the GDP of the country.
In recent months, Nigerian officials have taken their investment campaign abroad, from global economic forums to meetings in the Gulf, pitching Nigeria as open for business. The proposed asset sales are expected to rely heavily on public-private partnerships. Still, analysts warn that confidence will depend on policies and the state of security.
Policy risk is there. Some of our policies are inconsistent with reality. They do not support real investment. So we need to look at our policies, particularly sector-specific policies. Most of the times, we make policies for a sector, and you have financial policies or monetary policies or fiscal policies that are contradictory. We need to address the issue of policy inconsistencies or policy somersaults for those sectors to thrive.
Following a recent GDP rebasing, Nigeria is now ranked as Africa's fourth largest economy. The government hopes the 2026 asset sale will draw fresh foreign capital and deepen private sector participation. But experts say the success of the program will depend less on announcements and more on execution. For many investors, the next 2 years could define whether Nigeria turns reforms into real opportunity. Kelechi Amekalam, CGTN Abuja, Nigeria.